An exciting rally yesterday. We're seeing a scary pullback in the crypto space, and it seems to be following along with what we're seeing in the stock market as well. So right now, things are looking downward, although we haven't totally invalidated our previous impulsive patterns that we had in place. So this is an update on Polkadot, and these charts, of course, are available in a link below in the description. So check those out there if you are curious. But this is the 30-minute chart in Polkadot, and I'm just finessing and adding one more set of numbers here that I had forgotten to put there earlier. So this is what we have in Polkadot. We had our low on May 12th, which was around 693, and it fell right into the expected target range based on our bigger 1-2 structure. This was back earlier in the spring, and now we haven't really had too much upside action, although we've had a countless downside setups break down. When we look at this closer, I'm counting this rally from our May 12th bottom as a 5-wave rally in impulsive wave 1. This is basically the same story in most of the cryptos, although you could argue in Polkadot it looks a little bit more standard. You have a 1, 2, 3, 4, 5, convincingly so, whereas in other cryptos it looks more like a leading diagonal. Regardless, we have what can be counted as 5 up, then we have a A, B, C wave down. So this is convincingly a second wave, and this could have convincingly been a nested 1-2. Maybe here a 1-2, or maybe it's a 1-2 here. Maybe this whole thing's an ABC with one more C wave to come. Really depends on our interpretation. So there are, of course, resistances overhead, but the alternate pattern is still in the chart. That is red, and that says that this entire rally to the upside is actually a big ABC zigzag correction. In other cryptos, we had subsequent higher highs. So our C wave is further down in time, but in Polkadot, this makes the most sense. And if that is the case, there's a chance that we already have maybe a first wave in place to the downside. This could be some kind of a second wave bounce with the rest of our pullback to come. I've actually put down our, added some Fibonacci extensions to show where we could end up if this is actually the first wave bottom here or even here. Again, it's kind of a messy, ugly pattern, but we could see this thing stretch down to $6 or even the mid $5 range. This is the linear chart, of course, so things do project a little bit differently, and therefore that alternate pattern does remain on the chart, as this arrow indicates, which I'm actually going to shrink down a bit to be a little bit more realistic. So that is a choice. That is a possible path we follow. Otherwise, we are completing a small second wave, so this would be a nested 1-2-1-2 setup. I've been excited about this, although we've had a really deep pullback. We haven't invalidated this anywhere yet, and that entails that this is a 1 and a 2, and this is a smaller degree 1-2, as noted by the circle nomenclature. And we need to see our price level blast through this pivot zone. That's the 0.618 to 0.764 extension. So about 1162 to 1233. If we can clear that, then we've got ourselves some bit of a tailwind to give us a bit more encouragement. Comparing to some of the altcoins and other cryptos, Bitcoin, the original crypto, we're not seeing as deep of a pullback, and you could convincingly call this still maybe an A wave and a C wave that's in progress. So we may end up having a really deep second wave. That's what this looks like. If you're a bull, if you're a bear, then well, we should see a bit more downside action. It's all relative. I don't project us too much lower in any of these coins than where we've already gotten. And when we look at Ethereum, same kind of thing. This is about as deep. This actually looks almost like a triple bottom we've formed. I know our official low in Ethereum was just about 1700, 1702, and we came very close to that number again on May 27th. And here we go again, triple bottom. Now, if you're a traditional TA person as opposed to an Elliott wave analyst, you could call that an inverted head and shoulders. That could be an optimistic way of looking at it. I'm going to show Bitcoin Cash because this often does represent, well, it follows a very much cleaner pattern than most of the altcoins and often mimics or resembles what you see in other altcoins. And here too, we have a bit of an MACD divergence. So it looks like if we're going to have a bullish continuation, it needs to come right now. We can't go any lower because we will invalidate at least this nested 1-2 setup. And if we go any lower, we're going to invalidate the larger 1-2 setup as well. In Polkadot, we are also getting close, although not as close as some of these other coins. Again, our low on Polkadot was around 693. So we have more cushion, but if we start seeing a handful of coins moving downwards, we're going to expect the same kind of thing to follow through in a lot of the other coins as well. And I'm shifting over to the stock market real quick, just because I've been mentioning and kind of going over how we've had a lot of coinciding inflection points in the stock market and cryptos both. So in the stock market, we had a lower low on May 20th. We did have a pullback in cryptos at that time, but not a lower low in any of the coins I'm following. And since then, we have a 1, 2, third wave, and we're presumably in some kind of a long and slow fourth wave consolidation. And we really need to see a fifth wave higher in order to give us a larger and more confidence inspiring 5-wave impulse off of our bottom on May 20th. And as cryptos sometimes run ahead, they sometimes run behind, whatever it is, because we had our low about a week and a half earlier. If we see bullish continuation, we may see cryptos outperform just because they do seem to be on a bit of an accelerated time scale. That brings us to our daily chart, logarithmic long-term chart. I know Polkadot is a newer coin, so you don't have as much history, but a lot of the major inflection points do happen to coincide somewhat with the stock market. They correlate. So I'm going to actually shift a dash real quick because it has a very clean pattern that's easy to follow. I use it as my model crypto for long-term charts just because I have less clutter, but we have a major top in December to January 2018. So end of December, end of 2017, early 2018, and the stock market topped within a few months of that. So there is a precedent for the crypto space, crypto coins in general, to top in advance of the stock market. So it may serve as a leading indicator. Unfortunately for DOT, we don't have any data going back that far, but I have mentioned that for a lot of the newer cryptos, some of them do have this much history going back to the end of 2017. While I have it marked as a wave 1 in many of the cryptos, I've since relabeled that as a wave 3. It makes sense because the cryptos all follow the same sentiment. I know we want certain cryptos to outperform and we think they move independently, but really they all move together, just like the stock market does. All the stocks within it, for the most part, do follow the same inflection points. And therefore, if we had a third wave there and our March 2020 crash was a fourth wave bottom, we have one final rally, a fifth wave, possibly a blow off to come. In Polkadot, again, it's really difficult to calculate where the third wave top would have been because, well, I don't have any data going back before 2020. As a matter of fact, we don't even have the everything crash on here because that was about 2 months before the oldest data I have here. Not even 2 months, about 5 months before. So this is August 2020. So therefore, I would expect Polkadot to follow a similar pattern. And there's a chance that this is a first wave and a second wave, or actually it wouldn't be a 1-2 there anymore. The 2 is actually, this is invalidated. So our 2 ends up being down here. That's what the red pattern is following. I'm going to recolor this just to prevent any confusion. So that is our larger 1-2. It's been a long and slow correction. Could this end up manifesting as an ending diagonal? Sure, that would mean we don't project as high. But right now, we are seeing signs that, again, that we've bottomed. Our MACD divergence is still holding, and how the rest of the rally structure will look is still somewhat up in the air. I have this drawn as an impulse, 5-wave impulse, but we need to see some bullish action very soon first. So that is the red primary interpretation. The yellow orange is just it's a contingency in case we have that lower low we're looking for. So mid $5, low $6 range. You can see that there's a lot of Fibonacci confluence in that region, but regardless, it wouldn't really change what the rally looks like. We have confluences overhead, so I would expect our first wave to somewhat mirror what we saw in the decline. So oftentimes you see the fourth wave bounce align with the subsequent first wave of the next rally. So that would take us to around $23, $23.64, and you can build a fib sequence off of that. But before I do that, there is confluence overhead. So strong resistance at our all-time highs. So we've hit this resistance about 3 times now, right around the $51, $52 range, back, I guess, during the initial coin offering, back during the crypto mania in mid-2021, and then again in November. So this is a very strong resistance that we're going to have some trouble breaking through, and we might not make it on the first try. So if I build out the fib extension based on what we have so far, assuming we get a rally to about $23, and let's assume we get a standard 61.8% retrace, that means that the top of our third wave would probably top out, maybe run out of gas right about at that resistance zone, and we may pull back, and then we may have one more rally after that point. That would be a relatively conservative estimate on where we're going. We got our top somewhere around $97 to $129. However, if this really is a first wave and we have a third wave coming, it could go much, much, much higher. So we have a lot to prove before we can be confident we're actually going to get that huge upside. If this really is a 1-2 setup, which I'm, again, reinterpreting and having second thoughts about across many of the altcoins, just because if Bitcoin hits a major top, as well as the other older cryptos, we may see a colossal pullback for all the altcoins, even though we don't have the previous history of the first, second, third, and fourth waves in Polkadot. So got a little bit more patience we need to see this thing develop. Don't forget, we could see that lower low. It wouldn't be too much lower than where we are, so no reason to panic sell, anything like that. If you're looking for an opportunity to buy, it is probably better to wait for this larger rally to develop. On the linear chart, it's showing somewhere in the upper teens, $17 to $18, but on the bigger chart, maybe in the 20s range. Once that happens, you get that second wave pullback. That will be a more confident place to buy a lump sum if you're looking to do so. So subscribe, that way don't miss my next updates on Polkadot and the rest of the cryptos. And if you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.